Hello and welcome. Thank you for tuning into this video. 6 winning tips for management reporting when it's not business as usual. My name is James Irving and I'm joined by my teammate James Lynn. We're both on the customer success team here at Fathom, and we work closely with businesses and advisors to provide training and educational resources to help you get the most out of Fathom. In this video, we're going to cover 6 tips for management reporting and business analysis that are especially relevant in the current environment. And we're going to show you how Fathom helps you achieve the best possible management reporting for your business right now. After this video, we wish for you to walk away with new ideas for how you can get the most insights from your financial data. Insights that we hope will help you thrive during these uncertain times. For those of you who may be unfamiliar, Fathom is a business analysis and management reporting tool that allows you to understand your business performance and helps you to make better business decisions. Fathom integrates with best-in-class accounting softwares such as QuickBooks, Xero, and MYOB. So before proceeding, we just wanted to acknowledge the current economic environment. As a result of COVID-19, the global economy is in turmoil, and many would say we're living through unprecedented times. In Australia, the economy contracted significantly in the March quarter, and expected to contract in June as well, putting Australia in its first recession in 29 years. Also in Australia, right now is the largest quarterly decline in consumer spending in 34 years. This includes spending on transport services, hotels, cafes, and restaurants, and these sectors have experienced their largest falls on record. And in the United States, the national unemployment rate is 13%. Just over 13%, as reported in May. And GDP is down 5% in the March quarter. Now, this is not meant to be alarmist, but just to acknowledge that these are difficult times for businesses. As we come out of a health crisis and into a recession, many businesses will need to adapt their strategy to continue on. At Fathom, we want to help businesses to survive and thrive during this time. Now I'm going to hand off to James Lynn to go over the first tip for you all.
Thank you for that introduction, James. So to start things off, we've got Peter Drucker's well-known management quote, "You can't manage what you don't measure." This holds especially true in today's business climate. With all of this uncertainty around health restrictions, government policies, reduced sales and supply, the ability to understand and leverage insights from financial data is essential for business managers. And in the current business climate, it's even more imperative for decision makers to understand their business's financial position before making decisions. So here we have our first tip, know your numbers. A few orientation questions. Do you know where your business stands financially? Do you know how your most critical KPI is performing right now? KPIs can help you to inform how the crisis is impacting your business and how they can help you to navigate your business through the choppy waters of these unprecedented times. So that being said, what are the KPIs that currently matter the most to your business? In the current business environment, metrics which track financial health and resilience are going to be of the greatest importance. You want to track metrics that provide a holistic view of financial health and stability. This means tracking a range of financial KPIs, ranging from not just revenue or profitability, but also cash flow, leverage, activity, and efficiency. You'll also want to track some leading KPIs during these turbulent times. Leading KPIs are typically non-financial metrics, which can act as relevant early warning indicators before they hit your financial statements. So now let me switch over to the Fathom product. So you really need to be able to quickly assess the current position and performance of your business in order to make effective decisions going forward. So you can use Fathom's KPI tools for this purpose. You can quickly determine the performance of your critical KPIs at a high level. So here we have a list of some great KPIs to keep track of from a variety of different areas of your business. So just making sure that we're viewing things from a holistic level. So some key financial KPIs that can be quite effective to track during these times include things like total revenue, so how much sales in terms of dollar figures are you bringing in? Also things like operating cash flow, so this represents the cash that you're bringing in from operating activities of the business. And hopefully this is staying positive during these times. Otherwise, you'll need to bring in cash from other sources like investing or financing activities. You've also got things like liquidity metrics, such as the current ratio. So this is the comparison of current assets against current liabilities and kind of represents the cushion between your short-term obligations and your ability to pay them. And you've also got growth metrics, so looking at things like revenue growth. So how is your revenue growing and declining on a month-by-month basis? And down here, you've got some leading KPIs as well that you can keep track of. So again, these are fantastic to track the numbers before they actually hit your profit and loss or balance sheet. So something like customer satisfaction numbers, if you do have Google reviews or other customer satisfaction metrics, these have flow-on effects down the road. So it's always good to stay on top of these numbers. Also something like number of new leads. So how effective is your marketing efforts in bringing new leads to your business? Or how much has this been affected by the recent crisis? Is this potentially starting to come back a little bit now that a lot of restrictions that we're seeing by the government are starting to ease? So for any of these KPIs, I can view them at the high level. And we've also got another view that you can see, kind of looking at all of your KPIs from a high level. So you can see the overall performance of your business, but you can also drill down into more information to really understand what's going on. I can click on any of these KPIs to get that breakdown. So providing me with a description of the results, I've got the exact formula being used as well as the exact figures for the month. And I can also see a trend chart of historical figures as well. So you can really get a handle on these numbers, which is especially useful if you'd like to investigate them a little bit further after looking at them from the high level. So once you've taken stock of your current performance for the recent periods, you need to take a step back and look at your business performance over time. Has your business begun to recover from the impacts of the crisis? How does it stack up against recent periods? And what does that look like visually? Trend analysis helps to identify and monitor any changes over time. Trend charts visually reveal patterns of change in your data. There's three main things that you want to look out for with your trend charts. First is the direction of trend. So is your data generally going up or going down over time? Strength of the trend is the size of movement of the trend. For example, your sales might be decreasing, but is it decreasing at a fast or slow rate? Duration of the trend, so what's the time frame that you're looking at? Things may look different when viewing trends over 6 months, 1 year, or 5 years. So jumping into the Fathom product, we have a range of different tools that you can use to display your trends over time. So here we have the Fathom Trend Analysis tool, which allows you to show trends. What I can do here is add certain metrics to compare against each other. So maybe if you wanted to see revenue versus expenses, for example, and trend that over time and see how that's performing, whether the gap between your revenue and expenses is growing or shrinking. You can also scroll in or scroll out to view different time periods. So again, the duration of your trends, whether you want to see all-time results across maybe 5 to 10 years, or if you just wanted to zoom into a particular year and show 12 months of results. You can also play around with the different options available. So what I can do here is roll this up into annual results. And let's say I want to see a few profitability trends. So looking at things like our operating profit and earnings after tax. And then we can change that view. So maybe I want to switch that into a bar graph. So really highlighting those numbers, seeing how my year-on-year profitability is being affected by the recent crisis. And this can be helpful if you need to present your revenue or your earnings to the bank or to any other government agencies as well. We also have the ability to show trend charts in a dashboard on reports. So if you wanted to create a dashboard of various charts and graphs on a page, then you can set that up in a Fathom report. So I'll switch that over here. You can see that coming through. So this is a customizable report, something that I've created, and you can fully redesign the layout of your report. So you can see I can just drag and drop any of these elements and switch them around. You can also jump in and start customizing a little bit further. So right now we're seeing a revenue chart, but I can customize this, and maybe I want to add some variables here, show revenue versus expenses, and I've got different options available for customizing the date range. So again, viewing all-time results, or maybe just condensing into the last 6 months, rolling that up into annual results, or changing it to a bar graph as well. So a lot of different options available, and really helpful if you want to display just a dashboard of charts that you can come back to and check on a daily and month-to-date basis.
So in the previous tip, we considered how trend analysis is useful for answering the question of where does my business stand currently and how does that compare to prior periods. Another important indicator of current status and profitability is being able to assess the business's break-even point. This is critical for understanding the current margins in the business and how much cushion the business has in its operations. Fathom's profitability tool helps to assess how much of a downturn the business can handle, essentially how far revenues can decline while still maintaining profitability in the business. We'll also go through some helpful charts and visuals for assessing profitability in your business. Now let's jump into the demo. All right, so the first tool that we're going to look at in Fathom for monitoring the break-even point or profitability in Fathom is the profitability analysis tool. So this tool is found within the analysis tools, and it's primarily used to assess break-even point in the business and a few other key margins. So for any month, quarter, or year, the break-even chart plots revenues, variable costs, and fixed costs. As you can see, the fixed costs on the baseline, variable costs in red, and then revenues in green. And you can find where all these points cross, and that is the break-even point in operating profit for the business. So at this point, the business generates neither a profit or a loss. Specifically, operating profit is 0. So it's important to note that the business would still need to cover funding or financing costs such as interest, as well as some other expenses after this point. But this takes into account operating expenses and sets that against revenue. So understanding this break-even point is helpful for many purposes, including setting sales budgets and preparing business plans. This chart also highlights the break-even margin of safety. This margin represents the gap between the current revenues and the break-even point. This is the amount by which revenues can drop before losses are incurred. The higher the margin of safety, the lower the risk of incurring any losses in the business. A higher margin of safety indicates that the business is better positioned to handle a decline in revenues. So using this tool, you can actually run some scenarios and conduct some analysis for various revenue outcomes. So for example, what operating profit we would expect if revenues increased. We can see that the actuals for the period of May were at this point. What would happen if subsequent months actually increased? We can see what operating profit would be at those different levels. And we can also see if revenues decrease, which is maybe a more likely scenario, what operating profit would be at various levels of sales. So it's very helpful for running some scenarios in the business in this interactive break-even chart. Now, once you've defined where your profitability currently stands, the question becomes how to maintain or improve that profitability. Although increasing sales volume would be helpful, that may be difficult or even impossible in the current climate. Another way is to look to control your costs. And many of you may have already gone through this process over the past few months. A clear first step to controlling costs is to look at which expenses we can cut immediately. This requires us to define our non-essentials and decide what to keep and what to cut. Now, looking at your expenses, essential expenses are often comprised of things such as rent, salaries, utilities, or taxes, things that you're really going to have a difficult time getting rid of. However, non-essential spend can often be found in areas such as travel, entertainment, training, advertising, or other marketing expenses. But it's not just cost cutting the non-essential spend. We can also look to manage the expenses we deem as essential. So once we've split out our non-essential and our essential expenses, can we then look to reduce, delay, or eliminate costs that we believe are essential? Can we request a discount from a vendor? Can we delay a payment? Or potentially, can we request a payment plan to amortize a single expense over a period of time that will help us spread that expense out and preserve more cash in our business? Now we're going to jump into the demo and look at the expense breakdown in Fathom, as well as the top expense visual and reports, and some financials as well to help you control your costs. So to talk about controlling costs in Fathom, we're first going to start with the breakdown charts. And these can be found in the reports or in the analysis section. And we're back in the profitability tool now. But first, we're just going to go directly to the top 10 expense and cost of sale count breakdown. Now, this chart helps us to analyze expenses and answer questions such as, what are the major business expenses? And are there any significant non-essential business expenses that we're dealing with right now? So these charts enable you to easily review expense accounts in a visual way. For any periods, expense accounts can be sorted by amount to quickly assess which expenses are most significant. If the breakdown analysis reveals that materials, in this case, make up a considerable portion of your overheads, then it may be helpful to track significant individual expense accounts in your reports. In this case, we can see that materials, salaries and wages, labor and freight make up our most significant expenses. So we can look to manage those expenses first. So if we do identify some key expenses in our business, if we go into the report section of Fathom, the key number components become very useful for monitoring key expense accounts. So the component highlights the result for an account and also shows the variance from the current actuals to a prior period. So in this case, we're comparing versus the same month in the prior year. We can see that year-over-year comparison right there. And for rent, we're just comparing versus the last month. So we can see a slight increase there, but major increases in staff costs could potentially be due to just a growing staff, rapidly growing over the past 12 months. But this gives us a bit of an idea of how we're comparing from prior periods. And we even get a bit of a spark line here to actually see this trend over time. And we can interact with that and see how these expenses are changing over time as well. So a quick way to recognize key expenses and track them and monitor them in your monthly management reports. So when seeking to adjust areas where costs can be minimized, it might also be helpful to review whether costs are fixed or variable in nature. The distinction between these types of expenses is important when calculating the break-even point in the business. So first, let's define what we mean by fixed and variable. So fixed costs do not vary directly in proportion to revenue. So to determine these costs, consider expenses that would still be incurred even if the business was shut down during the current crisis. Examples include rent, telephone costs, internet, insurance, and loan payments. So businesses with a higher proportion of fixed costs are more vulnerable to sales decline than other businesses because they may not be able to reduce those fixed costs as their sales fall. Variable costs, on the other hand, actually increase or decrease closely in proportion to revenue. These are costs that are associated directly with business activity. Some examples would include commissions, direct labor, materials, and others. If you're able to optimize variable expenses, there may be a larger cash flow benefit down the line. If the business obtains cost advantages here, then additional sales will result in incremental profit earned for each unit sold. So in this chart in the report, we can see an expenditure mix in the business. So we can see our variable cost of sales here, the total amount for the month, and the percentage of our total expenses that variable cost of sales make up. So we can see variable cost of sales and fixed expenses are our two largest segments, with fixed expenses being a very large percentage of our overall expenses. So this business might be especially exposed to a downturn in sales with such high fixed expenses. In this case, we have zero fixed cost of sales and very low variable expenses. But we can see this breakout here in the expenditure mix chart. Just a quick tip, within Fathom, you can review your fixed and variable expenses and also reclassify those accounts in the company settings. So you get to define what is a variable or fixed expense account within Fathom itself. So the last tool that we'd like to look at for controlling costs in the business is the profit and loss. Fathom has customizable profit and loss and other financial statements such as balance sheet and cash flow. And within the profit and loss, we can easily compare our cost of sales, expenses, and compare all these expense lines against prior periods or other comparatives as well. So in this case, we're comparing the previous month versus the month prior to that with a variance. We can actually easily go into this statement and we can go ahead and change the columns that are showing. Potentially we'd want to compare versus the same month in the last year to get our year over year comparative. We can add in different variance amounts or percentages. We can also do common size or percent of revenue to show us how we are comparing how each expense line compares versus the revenue total every month. So this may be a very helpful comparative. For example, you may want to do common size this month versus common size the same month last year. And maybe we'll want to change our prior period comparative to the same month last year here. So in this comparative, we're looking at this month versus the same month last year with our percent of revenue comparison in line, so we can see how each item compares to our total sales volume in the business in each of those periods. So it gives us a bit more of a common size view of the financials.
Now let's move on to tip number 5, understand your cash flow. So it goes without saying that cash is vital during periods of economic downturn. Cash is the fuel that keeps the engine running. It's the lifeblood of the business. So for most businesses, profit is not equal to cash, nor does it reflect the cash position of the business. So it's really vital for all business managers to know where the cash has gone and to also know what are the core cash generating parts of their business. So the cash flow analysis in Fathom is really useful for answering questions like, where has the cash gone? Is the business generating cash or absorbing cash? Or is cash sourced from core operations or maybe from other activities like investing or financing activities? So using Fathom's cash flow analysis waterfall chart, you can really help to explain the inflows and outflows of cash for the business over a period, and it can really help to answer the question, where has the cash gone? So you can see that this waterfall chart is a very visual way to see the movements of cash. Green is representing cash flowing in and red is cash flowing out. You can use this tool to gain insights on your current cash flow and to inform decisions into the future. So for example, if you've noticed that the size of your interest repayments, for example, are quite significant relative to operational costs, then maybe refinancing should be sought out as a result. So similar to a cash flow statement, the waterfall chart is divided into 3 main sections which separate operating activities, investing activities, and financing activities. The operating cash flow basically reveals how much cash the business is generating from its primary business operations. So that's typically sales of services and products. Wherever possible, it's important to ensure that the operational aspect of the business is cash flow positive. Especially in the current circumstances, this can be a difficult challenge for many businesses. So any cash flow deficit from operating cash flow is going to have to be compensated using financing or investing activities or by using cash reserves. If you've got negative operating cash flow over multiple periods, it may signal that eventually cash will become insufficient to cover expenses or other obligations. So ultimately at the bottom, this chart shows you the net cash flow generated from one period to another. A healthy cash flow statement is going to show more cash coming in through sources of cash rather than going out. So this is also known as positive net cash flow. So this cash flow generated by the business can then be used to either increase your cash reserves or maybe to pay down some existing debt. Now, we all know that cash flow is important, but what drives our cash flow? So what actions can we actually take that are going to make changes to the business and flow through to be reflected into our cash flow? So there are 7 key financial drivers of cash flow. These are revenue volume, price, cost of goods sold, expenses, accounts receivable days, and inventory days. So these are the cash flow drivers. These are the drivers that are going to affect our cash flow. So if you can adjust each of these drivers, it'll enable business managers to control the availability of cash in your business. My colleague James Irving is going to cover this in a little bit more detail, just how you can manipulate these drivers in Fathom in order to set up a strategy moving forward, and also see how small changes to your business can make a big impact to your cash flow and profitability. And he's going to cover this in the next tool here, the Goal Seek tool.
So now we come to the last tip, move the levers with Goal Seek. Now, perhaps your revenue has fallen significantly and you've effectively controlled your expenses, but you're trying to figure out how you can maintain your cash flow in the current conditions. Or maybe your business has recovered significantly from the economic shock and you want to look at different scenarios that may play out for the coming months. In either case, at this point, we're looking into the future and trying to project and plan for where we want to go. Scenario analysis helps us to explore our options and find an answer to the question of how do we reach our goals. We can also find areas of the business where we have more leverage and apply our focus to those areas to get some quick wins in the business. All right, so now we're in the Goal Seek analysis tool. Now, to assist in your planning, the Goal Seek analysis tool is extremely useful for exploring scenarios and the impact of potential tactics in the business. For a range of financial metrics, you can identify what changes to drivers are required to achieve your goal. So we have an example here of free cash flow, and we're looking at the month of May. In the month of May, the business did just over $110,000 in free cash flow. And we set a goal of $125,000 for subsequent months. So we've set that goal to achieve. We're going to click go. And we can see all of the drivers that impact free cash flow in the business. And we can now create a scenario around these drivers. So potentially increasing the price of our product or service and seeing the effect of that change. Raising 2%. We can see the effect that would come into play for our free cash flow. We can also look to decrease expenses or increase sales volume potentially. Now, there's lots of different factors here. We see income, expenses, and down the bottom we also see some activity metrics, specifically receivable days, payable days, and inventory days. So these primarily have to do with cash flow timing. Are we able to potentially collect payments a bit faster on average each month? That can have a drastic impact on our cash flow. Are we potentially able to delay some payments and actually increase the number of average payable days in the business? That can also have a large effect. And then finally, inventory. If we do have an inventory-driven business, are we able to turn that inventory faster and increase our cash flow that way? So there's a number of drivers here that have an impact on cash flow, and you're able to manipulate these in the Goal Seek tool to create a plan for your business. If we create our plan and we're happy with it, maybe we're able to decrease our inventory days, and that will get us to our goal. Then we can set that as a goal. We can download this to PDF, and we can provide this plan to our managers to show everyone what our forward-looking plan is. Now, there are a number of other metrics that you can do this for. So I just chose free cash flow, but we have profitability metrics such as gross profit, operating profit margin, operating profit. earnings before interest and tax. So some of these are ratios and some of them are absolute numbers, but you are able to select any one of these and then perform a goal-seek scenario analysis on that metric. So for profitability, you can see that the drivers are quite different. We don't have those activity metrics because those don't relate to profit. So we're just bringing in the key profit drivers of price, volume, and expenses here. Now the goal-seek tool helps to understand the sensitivity of some of the key drivers in the business, as well as just creating a plan. So a driver with a high sensitivity indicates that a small change in that driver will have a significant contribution towards achieving the goal you've set. Identifying these drivers may reveal some quick wins for the business. Conversely, a driver with a low sensitivity indicates that a large change will be required to make a material change in the goal or contribution towards that goal. So in this example, just a 2% increase in price would reach our goal. Whereas if we looked to decrease our variable expenses in this business, it would take 152% change in variable expenses to actually reach our goal, which probably is not feasible. So that sensitivity analysis also allows us to define where our focus should be, rather than trying to cut variable expenses where we wouldn't have very much impact on our goal. We should really look to either raise price, sales volume, or potentially lower our fixed expenses in this case. All right, that concludes our presentation. Thanks for watching this video on 6 tips for management reporting when it's not business as usual. We hope this was useful for you and your business. If you'd like more detail on these tips and 6 other tips, make sure to check out the full guide on the Fathom blog. We also recommend that you start a free trial of Fathom. To do this, go to fathomhq.com and you can start your free trial there. There's no payment details required, and this will allow you to check out all of the tools we went over in this video. If you have any other questions about Fathom or any of these tips, please reach out to our team as well. We look forward to seeing you on Fathom soon.